Hi everybody. From a long time, the viewers of this channel been asking about a stock option strategy. The comments are full, so here we go. I'm gonna tell you the spread which I personally use a lot. Also, I'm gonna tell you what is the real meaning of a frog jump when we deploy the option spreads. Before I start, I have to tell you standard disclaimer that strategy explained is only for educational purpose. Stock market options trading always contains a risk to capital. So please do make a good note of it. Knowledge which helps you become a better trader. Setup and logic explained. If you trade a lot of stocks and you make directional bet when you trade into the stocks. Let me give you a sample. Obviously, it's not a recommendation for any stock. So we're gonna just simply take a support and resistance, which is very popular, and then we're gonna build our strategy based on that. Let me show you that. Now, obviously, there are many indicators, so we are not using any indicator, but what you see on your screen is an ITC daily chart. New series starts here, which you can see on October. Now, obviously, what you can see is that there is some kind of a support and obviously not a recommendation, but there are a lot of people who place support and resistance. Now, the issue with support and resistance is that if you take an entry during the close of the day, as you can see, the market is closed over here, right, roughly 15 minutes prior, and then if you think that the stock is bullish and a lot of people long futures or buy calls or make a debit spread, etc., but the next day if the stock really starts to go down, and obviously what you see, there is a lot of theta decay is also happening. So if you are selling put, obviously the direction turned against. If you bought a call option, then obviously theta is gonna get decay, and in between a week, 10 days, there is a lot of theta. So is there any way by which we can make a spread and we can make a frog jump option strategy? So we're gonna take this date and I'm gonna build up a spread, and after some time, before I close the video, I'm going to tell you the real logic of frog jump. So here we are on an option simulator, and like I told you, we have taken 1st of October, right? The same candle which I was showing you, and we have taken around 15 minutes prior because it was a bullish candle from the support, right? So for example, if I'm longing 410 call to lot, I look to short the next strike or next to next strike, and then I look forward to sell even more further call in this. So when I do this, let me show you exactly how this looks like. This will be a very good understanding for you. Now here, what you see is that stock is trading at 407 during that particular time. So at the money liquid strike, as you know that when you trade stock, liquidity can be an issue. So your stock selection should be good only with the liquid stocks, obviously. So we look to long at the money call option, and then we longing 2. I want you to make a note of this. And then we are shorting 1, and then we are shorting 2. So long, short, and again short. Right? This is how the setup looks to be. Now, when we do something like this, how this looks on the payoff. This is a really good study material for you. Now here, when we enter into the stock, obviously we expect the stock to go up. I mean, if that is your view, bullish view if you have. Now, obviously, if I zoom in, you will get more clarity. Is that if the stock starts to go up, then what you see is that, there is some kind of a hump here, as you can see. But let's talk a bit negative, that stock, starts to go against this. Then what do we see is that there is a flat line on the bearish side, which obviously we can expect some kind of a loss in this. Now, exactly on this day, the next day, market starts to go in opposite view. Now, if market go opposite view, we understand that the maximum is minus 8,000, right? Because it's a flat line. So let's see now. And obviously, like you've seen in the chart, the stock starts to go down instead. And obviously, when the stock is going down, then what do we see is it's obviously naturally impacting our position, and the stock is hovering, stock is not returning, right? Suppose if you just simply buy a plain vanilla call, then the theta decay is also happening with every passing day. I want you to really concentrate on what's happening on the stock at the moment. Now, what do you see? The stock has reached the 50% limit. As you can see, on the downside, it is minus 8,080. The overall position is minus 4,560. So it has crossed the position of 50%. Maximum loss which we have in the strategy in a simulation, which you can see. So this is the time to jump. What do I mean by jumping the frog? Let's take this point of view. What are the odds that the stock from here will truly reverse and go to the zone? The zone is very, very far. Okay, and obviously, as you know, that when we make any kind of spread, theta decay will also be in effect. So completely square off your position and take this hit and jump. That means now after exiting, we create a new position where the market is. How about that? If we do it, how will it impact the overall situation which we have? Let's do that. It's gonna give you a lot of ideas. So here we are exactly on the same date, right? If I show you the previous trade, this was the previous trade and we completely exited. Now what we did on the same particular time, the same date, now the at the money obviously have changed. It is 400 now at the money because the stock has gone against us. Obviously, if the stock go with us, then what's the fun, right? We want to cover the difficult part. And then what do is we go more out of the money and we adjust our trade as such, right? And don't worry about this maximum profit, etc., because real trading is different. Real challenges are different, right? Okay, so now let's see what we can expect from this. So now remember that 4,500 something, we already the position is in negative. Now here the maximum loss is around 93.60. So if we hit our 50% of it, we are completely out of the trade. Now, what are the chances that if we long at the money call option, the stock may just go a little bullish, right? If your view is such. Now here what you see is around 17th of October, and what do we see? The stock starts to go on the bullish side. And naturally, what do we see? It's, if the stock is going in our favor after jumping the frog, what do we see? It's coming out to be quite favorable for us. Now, obviously, because the stock has really hit the peak, so it's, naturally, it's much better to exit the trade completely. But if somebody, just for a simulation purpose, right, if somebody, really carry the trade till, the last week, what do we expect is that now this is the time where it shows you favorable outcome minus the jumping premium which we paid, which is minus 4560. So now when we do something like this and we react with the stock, if the stock is going down and we jumping the strike, remember this contains certain model risk, and that if we exit on a 50% and then we jump the frog, and if the stock just goes, for example, really, really down and our view is completely opposite, we can always hard exit our stocks. That's always better and a smarter idea to do it. Now, there are some more points which I want to tell you before I conclude. And by the way, if you like the video so far, give it a like. Drop in a comment. Let me know, right? How do you like these different twisted concepts? Let's talk about some more points now and let's make it more interesting. So common mistakes. Number one, it's always better to keep hard stop and don't just keep on jumping. This is a very important point where maximum mistakes can happen. Like for example, the stock is at 415 and we make a spread, stock come to 400, we jump. And again, stock come to 380, we jump again, keep on jumping. That can really, really take the position out of control. So always make sure that you have a designated stop loss. A hard exit is what I call it. You can completely square off. You're trading probably maybe RSI or support resistance or any other tool which you have, and I've made a video in the past, the tool which I personally like to use. Any of the options which you probably have. Remember this always. Risk cannot be zero in the trade. Always remember that. While making the strike sit, that means when you just making the strike, when you're just entering into the strike, it's better to not just see deltas in isolation, but the overall trade. Because when you make the position on the first of the month, the deltas calculation gonna be different. But as the trade progresses, if it goes into the favor, well and good. If it doesn't go in the favor, in that situation, your delta calculation is going to change because the premium will obviously be expected to reduce with the passing time. So that is something good. So there are a lot of traders who asked me in the comment section as well, that just tell me the deltas of the stock, because you see option pricing is different. ITC will have a different IV than, for example, TCS. TCS will have a different IV comparable to probably Nifty, so they're all different. So it's better to make it in a simulator and see and have your plan A if things go good, plan B if things go out of control, then how much could you jump. That is something which one definitely needs to calculate beforehand. That's the exact reason why I tell you, hit and trial way of trading one must completely avoid. You can obviously learn the better, smarter ways to do things. Earlier the intraday straddles used to be super popular, right? Or iron fly, where a working professional is just like adjusting in a week how many times. But as the progression happens in the option trading, as you progress towards better things, maybe different things in your trading, you could see how much of improvement have you done in your trading. All right, so that's it from me today. I hope you enjoyed the video. Thanks for watching, and thanks for your likes and comments under the video. That tells me that there are a lot of people who are interested and they're understanding the advanced stuff, which motivates me to tell you, probably help you out in your trading. Thanks for watching. I wish you all the very best. Take care. Bye-bye.